Very good morning to you. Welcome to Trade Live with IG on the 28th of October. We're getting near Halloween, but there's nothing spooking these markets apart from Chris Beecham this morning.
It'd be scary if I was wearing a hoodie, though, wouldn't it? Could you imagine?
We almost got him in a hoodie. Almost.
I don't know how to get in it. I don't know.
Or out of it.
No, or out of it, no. Feel like a straitjacket.
Right, good morning to you all then. How are we? Gavin Ackers, the British Indian, Andrew McKelvey, Parky 77, Shrimp Fred, Paul Williamson, London Guide. Somebody was messaging me on TikTok last night, and I want to know who it was because they said they watch the show every day, but I'm not sure if in the chat. So give us a shout in the chat. We're chatting options. And Chris, how are you doing?
I'm very well, thank you. I've had a good weekend away, so...
Yes, because you only got back late on Sunday, that's why you were home
reasonably late, so I got Luke to stand in. So we're down in Dorset, Sherburn. It's a lovely town. Have you been?
No.
It's really, really lovely. Yeah, Sherburn Gallery in Dorset. I think it's Dorset.
And were you playing on your organ?
No, I didn't do the playing. It's my singing, yeah. I don't get that joke, Gallery. I don't get that. Yeah, we were singing for the weekend, so it's a really nice building, lovely town. So
fantastic.
The weather wasn't bad either. So.
Oh, really?
Yeah. Actually, no, Sunday was a bit cold, but Saturday was lovely and sunny.
Shall we have a look at the weather outside this morning?
We've all come in soaks this morning because it's that kind of, drizzle where you don't think it's really rainy, but you end up...
I didn't even bring a jacket. Didn't even bring a jacket this morning. Stupid. 15 degrees. I've got a hoodie here, so I'm fine.
Well, you just hop on the district line, don't you? So you just literally hop out of Cannon Street and...
Yeah, but Uber have gone really cheap on their cabs now. So it's just so
We're not paying for that, I hope.
Who's we, sorry?
So we, the company.
The royal we.
The family.
Yeah, let's have a look at what's coming up on the show this morning. We've got real start of earnings season. We're going to go through some earnings in a minute. But myself and Beachy are going to take you through opening bell. Then you got guess the chart. What country are we in today, gents?
Oh.
He hasn't decided yet.
Yeah, that's code for they don't know yet.
Yeah. Fast markets. We've got Luke and Beachy taking you through fast markets because then I have got Elliot Harris coming into the studio at 8:35. We're going to talk all things options. He's going to be feeling very confident today because...
Really?
Yeah, Elliot and I have got a bet on 7,000. He says 7,000 before my 6,000 S&P 500, and he's getting...
He's doing all right.
Eeringly close. And last time he was in the market had just dumped down to 6,500, so I might have been crowing about it.
Fair enough, but you can't deny he's been right so far. It's only a jump. What if we get 7,000 before the end of November, and it just doesn't go anywhere from there? That's...
No, if it touches 7,000, then he wins. I've got to buy him dinner.
Ah.
Right, I'm going to give a blatant, desperate request out to all the fans. Very sad. Let's get it over and done with. I am up for an award on Thursday, which is the Finfluencer Award 2025. I would absolutely love if any of you would fill in the form. Who you want to vote for is absolutely up to you, but you can see, I'm sorry, you've got to go through all these different, you've got to vote for one person. But there we go, best economist, Finfluencer, an outstanding individual, oh, that's me out, who simplifies complex economic concepts, provides practical financial insights, and influences public understanding of finance. So clearly, PensionCraft is the best one for the job there. But yeah, if you would drop me a vote there, that would be much appreciated. Phil is going to put the link on the chat just in case. But yeah, apologies for the desperate. I see Chris tapping away as we speak.
I know. How many times can I vote? More than once, or just?
Yeah, for somebody else.
Vote early, vote often, as they say.
Right, let's go into overnight action. Right, I want to go straight to the most anticipated earnings releases because that is the story of the next few days. There we have. It's not crazy today, but there's enough there still to get our teeth into, isn't there, Chris?
Yeah, it's about, is it 2/3 of the index over the next this week and next, isn't it? I think in total. I don't know what it is in market cap level. Somebody cleverer than me can work that one out. But it is a fair whack, isn't it?
Huge.
Whatever how much of that is. But yeah, massive week for earnings this week and next.
And the big boys in the next 3 days.
Yes. So Meta, Microsoft, Apple. Where's Amazon? There it is, Thursday. And then Apple as well. Yeah. So it's always sort of make or break week, isn't it? That's what they get in the press. Is it make or break week for earnings? Now, if you look at earnings season so far, 166 have reported. Earnings beat of about 7.5%, which I would say yesterday to the desk is above the 10-year average. The 5-year average is 8.4, but the 10-year is 7.5%, so we're just above that.
Yeah.
And it's actually in line with what we had for all of last earnings season.
And that's, of course, because earnings were cut after April. The big unknown whether tariffs were going to have an effect. And now the company's coming out and saying very little effect.
Yeah, and there were a few people yesterday saying it's because mostly they're getting round it. And the reason why tariffs aren't, because as a foreign company, if you've got no US operation, you can simply dump the stuff at the port and they're not checking properly because they're not set up for this. If you've introduced a tariff regime on a customs service that's been used, obviously checking for narcotics or whatever, and suddenly you've got to check for tariffs as well, it's probably fairly easy to get around it. So there is a suggestion there's more than a little bit of fraud going on with this. So that's why it's not being passed on.
Got you.
So that's one reason why it's not really going through.
Okay.
And there has been passed on. It looks like it's sort of half and half at the moment between consumers and the company themselves.
Yeah, yeah, and they seem to be able to put up prices on everything by a little bit to make up for the little bit of their goods that are being tariffed as well.
Yeah, exactly. So and they're obviously the shipping it through Vietnam, whatever. These kind of ways around it seems to be the way it's working. But I think that the lesson of the weekend is that both sides don't want a full-on trade war, and the markets have been very good at sort of sending that message. And if you look at the performance of US and Chinese stocks, they are mostly pacing each other, really, step for step. So it's a sort of a message from both indices that, no, we don't like tariffs, and we'd rather you didn't have a trade war, thank you very much.
Yeah, Canada are on the page with that as well, aren't
Yeah, poor old Canada. I mean, you have to wonder if Carney rang up Rob Ford and said, what the hell are you doing? You've annoyed him now this time.
Yes.
Because it's, but Trump's point was it's manipulated speech. It's not. It's exactly Reagan's speech. And initially, the Chinese embassy in the US tweeted that speech back in April.
I'm actually amazed it hasn't gone viral and just everybody...
Well, yeah, I think I've certainly looked it up and watched the thing in full, and it's definitely not AI. It's the proper recording from 1982 or something.
Yeah. The best Reagan one I like is when the balloon pops and he said, you missed.
Yeah.
What was it, weeks after he...
Yeah, weeks after the assassination attempt. Yes, because he was famously the one who got caught on a live mic. He was going to give an address to the nation.
Right. And
as they were just warming up and going to go, and he didn't realise they'd gone live, and he said, we begin bombing Russia in 5 minutes. This went out.
As a joke.
Yeah.
Wow.
Yeah. Always never trust a mic.
Yeah, absolutely. Good stuff. Thank you all for taking the time to do that as well. Julian, didn't realise there's so many influencers. And Andrew McKelvey, has Rachel Reeves been nominated in any category? Is there a Chancellor of the Year?
There should be, in so many ways. Outstanding in her field, but not in a good way.
Yeah, outstanding. Yeah, certainly stands out in what she's done so far with National Insurance. Okie dokie. Well, let's take a little look at the Times this morning. What are we seeing? Nothing really on the front page news-wise, just the usual asylum seekers. If you're going to have a game of bingo...
What's today's headline?
Yeah, then I would imagine that Prince Andrew would be there, asylum seekers would be there, and something bad about Labour. So we tick the boxes with all those. Oh, and the spy case in China as well.
Yes, yeah.
But Nelson Peltz has come in to bid for Janice Henderson. This is an interesting one.
Oh, okay.
That's
Nelson Peltz to Janice. Hey, there you go.
Yeah. So Janice and Henderson merged back in 2017 for a combined $6 billion And Nelson Peltz, of course, who has bid for Heinz in the past. He's bid for Cadbury, and then also got involved with Disney. Kind of failed attempt at getting involved with Disney.
Didn't have a fairy tale ending.
He has, now made a bid. He already owned 20%, but what we didn't know, and what the Times has gone a little bit down market there, is that he's the father-in-law of Brooklyn Beckham.
Well, you've got to give it an angle, haven't you? So otherwise, most people would read that and not know, I suppose.
In
really.
the Times? Who
Well,
cares?
you've got to get the clicks. It's all about the engagement. That's the most important thing.
What is happening? And so it's
Only 12% rise. It's not massive, is it?
well, it went straight to the bid price.
Right.
So $46. So it's actually trading through the bid price.
You've got to hope somebody else is going to be flushed out to bid for it.
Yeah. So that is Nelson. What else do we have there? Tom Hayes suing UBS over the LIBOR.
Brave, I think.
They did throw him under the bus.
They did, but then the judges, because I think, did we discuss this when he was sort of cleared? The way the judge, he said essentially the prosecution mucked it up. And the judge said, if you've gone for the proper test of, does this look like misdemeanor to any normal person?
Yeah.
Then they would have, but because they were trying him a different charge, they could clear him on that basis.
So they didn't
We'd
necessarily.
like to clarify he was cleared before we say anything else further, just for the point of it. But yes.
Yeah, seeing as he's in touch with his lawyers, clearly.
Yes.
They didn't say he was innocent.
No, exactly. But he's going for more than 400 million in debt. Where's he calculated that? That's going to be the key question, isn't it? It's like my non-farm payrolls forecast.
Well, 200 wasn't enough, and 500 would have been too much. But that
$500 million in damages would sound a bit too rich, wouldn't it? Really.
It will be an interesting one. Of course, what he's saying is that he was thrown under the bus to protect the management because the management knew about it all along, and those things could never happen, could they?
No, not at all.
With our friend at SocGen, I'm sure
exactly.
SocGen had no idea Jerome Kerviel had that much exposure to the Euro stocks.
Yes, it's fine. The bank was either asleep at the wheel or ignorant. One of the two. Which one would you rather be?
Yeah. And funny, we don't hear about the people going to jail for making huge profits, do we? Can't recall a single one.
No.
I wonder what happens to those profits.
Yes. Let's not wander into this slightly more.
Right, so that is Sunday Times. That is the Times. Anything else there? Diageo, Alistair Osborne talking about Diageo needs to sort out its succession. Of course, the CEO, terrible performance that she's had there. The share price down 40% since taking over.
Yes, and you had, was it Shore Capital saying a month ago there were the brands they should flog off to raise cash, conduct a buyback, essentially stop the rot in the share price and sort of focus more.
Right, HSBC. Looks like they have had decent numbers. So upgrading their profit forecast, shrugging off a drop in the third quarter.
Despite Bernie Madoff, is this a headline from 2009? I don't know where that's come from.
Oh, they've taken a $1.1 billion provision because of Madoff.
Banks taking a provision for something? You don't see that very often, do you?
Not this week.
Yes, but the problem is for HSBC, they've had a fantastic run. So it's, I mean, if you look at the shares, where are they now? Above £6 a share again now?
Yeah, do we have your screen there?
Let me just see if only because I apologise, it's more than above £10 a share. HSBC.
Is it really above £10 a share?
Yeah.
Wow.
Which has obviously come off the back of these huge gains, if my network would work. Over the long term. Google Finance isn't playing ball this morning, so.
I had that yesterday as well, actually, and then we had a fire alarm. You did miss the fire alarm well yesterday.
I know, I had to cover for you, didn't I? Yeah, Karen.
Apparently, we got to the bottom of it. It was somebody vaping on the floor above us. So
we can definitely say it's not one of our staff
Good
these
work.
days, at least. So.
Let me check HSBC. Right, so you wanted, oh my goodness, what a run it's had.
It has delivered massively recently since. Another post-COVID star, isn't it?
And this does, kind of underlines how great the FTSE's been this year. It really is forgotten about the UK banking stocks.
European banking stocks, really, but yeah.
Yeah, have, really helped drive the FTSE higher and higher.
And all of that, and you got nearly 5% yield on that as well. So
yeah,
if you look at the much longer term chart, it's not as great. It's been a more disappointing performance from the 20 years before that, sort of up to £8, back down to 4, rinse and repeat.
It's basically as soon as we started raising rates, isn't it? It's doubled since we started raising interest rates. It shows you once you get onto a trend, there's always the theory banks do better from higher interest rates. Obviously they do, but right at the start of something, I don't want to pay £6.60 rather than £6.40.
Yeah.
No, it's gone to £10.
Yeah. You had plenty of opportunities to get on board that one, and did very well all the way through 2022 as well. So there was your hedge when everything else was coming off like a train.
But yeah, if you've a UK portfolio of a couple of the banks, a British Airways, a Rolls-Royce, and what's our other big performer? BAE.
BAE.
You
Ostensibly a very boring portfolio, but it's done very, very well.
Yeah.
And has also paid you a very chunky dividend on that to go with it, but yeah.
There was some news on BAE yesterday. So Turkey buying some of the Eurofighters. So a really, let me get on to a shorter term chart there. God, yeah, that's come off a lot. So what's happened to BAE in October then?
It's interesting. I haven't seen specific news to go with it because maybe it's a tyranny of high expectations. We were talking about yesterday to Bloomberg about Goodwin, which is the other defence firm in the 250 that has doubled its forecast and has literally roofed. You've not seen the share price.
And is that a defence?
That's defence as well.
Right.
So almost it's one of the few other defence firm that isn't BAE or Rolls-Royce.
Right.
Clearly piled in. But yeah,
This is because Trump's stopping all the wars, isn't it?
Well, there is that. Nobel Peace Prize is in the post, you would have to think.
Next year.
Next year. So that's interesting. Yeah, BA's taken a knock, but you'd still argue you think it'll come through. I talked about yesterday about Germany plans to spend 350 billion euros on defence. So clearly there is still a bonanza coming down the road. So obviously the problem, if you're looking at this now, is when does that really start to show up in the revenues? When does that really start to come through? Because the sort of 28 times earnings, there's not too much of a disappointment in defence. I don't know what the average PE for the sector was before this, but that high.
No, not high at all. So the story here came out, I think that was 4 o'clock yesterday. That was the spike. It was Turkey are buying 20 Eurofighters, but they're also buying 24 planes from Qatar. Now, the problem is, and you see the share price came down again there, people don't know whether that is Qatar saying, right, take our old ones, Mr. Erdogan, and we'll buy some new ones.
Snazzy new F-35s, yeah.
Or is it them retiring the Eurofighter completely? And that means, of course, that would be a negative. So it's we just need a little bit more colour there from Qatar's defence plans.
Well, they don't need defence now. They've got the Americans, haven't they? Signed a defence pact. So.
And drones.
Drones.
Don't need
well,
planes anymore.
yes, because Turkey's built its own aircraft carrier purely for drones.
Wow.
Which is really interesting that they're sort of doing it on the cheap, because I suppose the most expensive part of the operating of a carrier is your pilots.
And where's it going to sit?
Well, it'll poodle around the Black Sea and the Mediterranean, and because it's kind of a counter to the Russians, most obviously.
Yeah.
And to scare the Greeks when they're feeling bored, I suppose.
Right, Financial Times, we haven't looked at there. Now, this is an interesting one. $100 billion stock swings expose the fragility beneath Wall Street rally. Bit of a desperate headline, I feel, this morning. The reason that we've had so many $100 billion swings in the market this year is because the market is at a much higher market cap.
Yes, it's like Dow rises 100 points. Yes, well, that's not very much, is it?
Exactly. But what this does expose, which is an interesting one, and that is quite a nice visual, isn't it? It exposes some misconception over what happens when a market goes up and down. I think a lot of people still make the mistake that when a market goes up $100 billion, it's because people have bought
$100 billion.
$100 billion. And generally the number is about 10%. So it would take $10 billion to send the market up by 100. And it takes maybe even less to send the market down by 100. Because of course the bids disappear at that point. So, you know, when we talk about market caps of $4.5 trillion, $4 trillion, that is just a hope figure. Of course, a large number of people could not sell their stock at those prices, because when they do start to sell, then of course the market comes lower, and that money just evaporates. So it's not real, and I think that's a big misconception that, you know, you've got to take into consideration with your own pot as well. It's only real when you sell it.
Yeah, it's only a profit when you've actually got rid of it. And is this story kind of a rehash? I don't need to dismiss it out of hand. Is it kind of a rehash of ETFs are bad for the market because they all have to do the same thing at the same time? This was the fear, wasn't it? Are ETFs eating the stock market? The answer has been probably no, but it certainly was the story that did the round a few years ago. But maybe because has April skewed these numbers? If you didn't have April and the volatility there, because in the article it says the index volume has been fairly muted. It's at the single stock level. I don't know, that 84 it's last year and 33 in 2022.
It's the zero DTs. So that's what's really throwing stuff around yesterday. If you look at the market yesterday, right? So let's see if we can get this. All the volatility now is happening in the last. Let me see if we can get it. So here, that move from 7:30 to 9 p.m. is because of options. So that's big options positions that they know they can manipulate the market into the close, and then all the hedging that goes on, driving it higher and higher.
So if you look at the article, the 5 of the biggest stock swings, you can get it up on my screen.
And then, of course, it does absolutely nothing after.
Yeah, those, fun enough, they're all in the same sector. It's NVIDIA from January, Oracle's move in September on my birthday. NVIDIA again, Meta back in 2022 because that was a shock, and then Broadcom. So, I don't know.
The biggest stock swings of all time. That was DeepSeek. So DeepSeek is the biggest. Wow, that was a big day, wasn't it?
Yeah. So it's huge moves, and obviously you had Qualcomm going up 10% yesterday because of the NVIDIA deal. But it's also an earnings season, this one and the last one, where misses are still being very heavily punished. So you do okay if you beat expectations, but if you miss, the market is very, very intolerant at the moment.
I'm really hoping that Starbucks is one of those. I am short Starbucks. I'm at that horrible juncture where I don't know whether to run it or close it ahead.
Get off the pot. Yeah, stop with the coffee puns. Yeah,
grind it out further. That's brilliant.
You're a bit latte for that
Producer
trade.
Phil just nailed that one.
Yeah, you see, it's had a fantastic bounce back. See, I would be more shorting it. When did you short it?
Probably around the 83 level.
Oh, so, fairly recent, in October.
Yeah.
You see, yeah, I'd agree with you now. I might be tempted to short it.
Okay.
Now, so it's price action.
Oh, that's.
I'm not telling you. I'm not telling no advice.
No, that was financial advice, Chris Beecham.
Chris said, "You write this one down."
So Starbucks is a tricky one for me this week. Whether it's my only single stock short.
Okay.
So
Mr. Bear.
So
I
of
thought it was
course,
a bit more exciting than that.
that'll be what happens. The market will go down on Thursday, and Starbucks will be up.
Starbucks rally, yes. So many times it's happened. Why is my short going up, my long going down? It's so painful.
Yeah. Took some profit on Ethereum yesterday. Ethereum had
Good bounce in crypto land yesterday, wasn't it?
yeah, it was, wasn't it? What else? Try to think what else. Still got the majority of positions. Marvell had a really good day yesterday, actually. Marvell was one that came to the party. I think that was up 3. I bought some gold miners yesterday. Now, that is going to get hurt today because gold has, not only did it drop yesterday, tried to rally back to 4,000 and it failed, didn't it?
Yeah, it was not been a fun. It clearly hasn't settled yet. I think we were talking about this on Technically Speaking, that show that I couldn't remember the name of yesterday. Sorry, gallery. They've not forgiven me yet. But it hasn't yet finished, has it? It's still got, I think, a bit more clearing out to do.
I thought...
What you want is an FT headline that says, "Is gold's rally finished?" And then you go, yeah.
It literally, they called the top, didn't they?
Yeah, they probably did, yeah. So I think that is, you've got to see it coming back down. It'd be nice if we were obliged with this 50-day moving average. It came down to about there.
And where is that, sorry?
What, the 50-day?
Yeah.
38.50.
I think that makes sense. I can imagine it trading there.
Takes a lot of the froth out.
Yeah.
And then, as I said yesterday, watch the price action. But yeah, we'll see.
In fact, I might sell some puts there because I would imagine that will hold. Right, it's probably time for us to have a break. Let's do a quick 90 seconds and we'll be back with you for opening the London Stock Exchange this morning on the... Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Well, all of you that are about to leave the house and go off somewhere, it's a very different picture here in London than it was 20 minutes ago. Oh, I'm going to go out and get a coffee.
Yeah.
That's yeah, Phil's saying there's a coffee machine here. They gave out free coffees yesterday. They don't have any decaf. I only do decaf now.
Why?
Decaf's for wimps.
Of course it is.
What, like non-alcoholic beer?
Yeah.
Go on, the rebel that is Chris Beecham.
Non-alcoholic gin. Have you tried that? It's just flavoured water. It's ridiculous.
I don't think I would go down that route. Right, we've got 30 seconds to the open, Chris Beecham. What are we going to be looking at this morning?
So HSBC on the bell, see how they reacted a bit more, and then a bit of AstraZeneca. Gold.
Let's
Gold
see.
miners.
Opening calls. Anglo-American up 1%, on track to meet 2025 guidance. And HSBC looking up 3%. We've got a Barclays buying Best Egg for 800 million. Evoke looking up 3%. My good friend Michael Taylor did message me this morning saying Evoke, one to watch this morning. Strong Q3 results with revenue up 5% year on year. Management expect EBITDA to be ahead of consensus. What's the biggest winner this morning then? Is it HSBC? Yes, it is. Chris Beecham, good call.
There we go. Don't get them right all the time, but there we go.
Not too much else there, is there?
No, Tesco. There we go.
Tesco 461. Oh dear. Oh goodness me. What's that?
A bad sound.
Yeah. What's happened? Oh, I can't even see what it is. Did anyone else see what that was? Why am I not getting the... I don't like that.
BNP down on the French index, down nearly 4% though.
Okay, let's have a quick look at UK and then... Right, so...
Poor old Fresnillo getting whacked again.
And bat down, BP 432. Yeah, and Lloyd's down 0.5%, even though HSBC is strong. Interesting. But Lloyd's are at 87 now, so that's, you know, officially broken out. Let's go to the story there that Chris was talking about. BNP Paribas. See if there's anything out in those.
Were they the ones that were sanctioned last week?
Numbers.
Was that them last week on the Sudan thing?
Is that why they were down 7 last week?
Yeah,
right.
They're worried about, they sort of took the numbers that were given out in the conversation, and because there's only a few people, if more people applied. But yeah, okay. So numbers this morning, okay.
So group revenue is 12.5. Yeah, look at that. The consensus was 12.8. So even a miss at the revenue. How can you miss revenues by that much?
Yeah, nasty. Which is interesting. That comes, of course, as the French index sits at its highs for the year, or near the highs as well. And we've got more French political turmoil potentially on the horizon next week. So,
right.
What else is new, really? But...
confirming net income target for the full year, and a whole other heap of French headlines there, but not helping the share. So the stock down 3%. Rheinmetall is the second biggest loser, back down to 1,700 euro. And SocGen going down in sympathy.
BNP was at an 18-year high in May. Now it's had a nasty, nasty couple.
Yeah, how much has it retraced?
It was.
Do we have a quick look at BNP?
Yeah, there you go. Can you see that one? So there we are. Oh, it's our 18-year high. Back in, in August. Can't read my charts. And then you've seen it come all the way down. So that is, and that was last week's drop.
Yeah.
I think, on that lawsuit news. So maybe deep value here, back where it was in April. Don't know.
Deep value. On the upside, we got Deutsche Telekom, very boring, E.ON and RWE and Danone. That is your defensive basket. If you're going to buy defensive in Europe, those are the 5 names you would go for. So nothing happening there really. Let's have a.
What's BP? You said BP was down. Yeah, Shell down as well, because oil is off by 1.5% this morning because OPEC expecting to increase production in December.
Yeah, you got miners and the Shell down 50 basis points. BP down 1%.
Fresnillo, top loser again today. Was one of the big ones yesterday.
Antofagasta down 80 basis points. Remember, Anto's also. When they mine the copper, they also mine a bit of gold as well. So that does have exposure. Ooh, Art of Investing, we're going to get hurt this week. We got exposure to the gold miners.
Well, it's been the right thing to do, so you've had to take a bath sometime.
Yeah. Everyone has to take a bath sometime.
Just try living in my house for teenagers.
Impossible to get in the bathroom. Are we talking low teens or getting 15, angry teens?
Mid-teens. Angry? We don't do angry no more, we do sulky. That's what we do.
Right. But is Dad still in favour?
Non-communicative.
Is it Kevin and Perry?
Yeah, it's a bit that way, isn't it? Oh, no. Harold and Kumar, I don't get that reference. I get a Kevin and Pei reference.
It's so unfair. I hate you. Right, commodity land. Then we spoke about gold. Let's look at how silver is doing. Yeah, there it is. It's shadowing it down 1.4, just as weak as gold is this morning. As oil is, Brent crude down 1.3 as you stated.
US crude, yeah, down off by 1.4 as well. So looks like the downtrend reasserting itself there quite nicely. So seems to be working out well this trade week. But then last week's started well and hasn't really gone anywhere. So we'll see.
Currency world. Yen, well, it's stronger actually, isn't it? Yen stronger by 0.5%, 152. The Nikkei, did we have that overnight moves, guys, on the Asian markets? No, forgot this morning. Good. Right, I see somebody still.
If you want a chart on it, but there you go. So still above 50k. Yesterday's celebrations,
but down 0.5% today. So Japan down 0.5%, China down 0.5%, and yeah, little bit of profit taken.
10,000 points on that index since the beginning of August. That is quite something.
And what's this now? Bloomberg headline: the EU is in talks with backers of a €5 billion critical tech fund. European Union discussion with anchor investors. They're actually doing something.
That'd be a change.
Will back companies on the continent working on quantum computing, artificial intelligence, and other strategic technologies. Now, speaking of those, shall we have a look at defense holdings? Are people still in it? Let us know if you are still in it there. Defense holdings at 250. Then let's look at our friend Pensana, because I see somebody in the chat says it is up. And yeah, it's come right back, hasn't it? 117 trading there. It was higher on the open this morning. What about SWC? It is, it's down, well, it's not really traded this morning, has it? 55, 65 widespread there. Get one of your buses through that, Chris.
Buses, maybe.
Right, I think that's pretty much us for the moves then. We've got Luke Moore coming in to join Chris. What are you looking for the rest of the week, do you think?
Well, obviously, we have almost forgotten about the Fed tomorrow, which is a crazy thing to say. But yeah, so see what that says. Do they clear the way for December as well? Because I think we're guaranteeing, obviously, Bank of Canada today as well.
Sorry, just chart up on the Fed. What's there, please, guys?
So that's expected, and then ECB tomorrow and Bank of Japan Friday. So there's a load going on. That's your, is that what?
So that's October. We're guaranteed to go down to 3 3/4 to 4.
Still very much betting on.
And then December, we're guaranteed to go down 3.5 to 3 3/4.
Do we not get a Santa rally if they don't cut? Could you imagine if they don't cut in December and that just spoils the rest of the month? But there we go. And then January, fairly split.
Yeah, January.
As you'd expect. Really.
Yeah.
Nobody's thought that. Nobody thinks beyond Christmas at the moment.
50% chance of another cut in January. Wow.
You had, what's his name yesterday, didn't you? Was it Kevin Walsh yesterday saying that the Fed would go down a lot more? So the auditioning for the post has started again, it seems.
Right. Yeah, of course. Let's just finish there with a quote from Cathy Wood. Cathy Wood does not think that AI is in a bubble. She does think it needs a reality check.
It's quite interesting from her. I do agree with Cathy.
So
I don't think it's a bubble. I still don't think it's a bubble.
No, a reality check sounds about right.
Yeah.
15%.
Well, we are overdue. 50%.
15.
Okay, 15. That's like you're saying. I thought it was 50% there. Yeah.
Yeah. Very seldom do we have rallies like we've had without some kind of
you have to
12 to 15%.
You have to pay the piper at some point. There's no argument there at all. Just trying to predict when it is fruitless. But
yeah,
again, it's 2017, 2018. I think is your parallel here. Quiet, and then eventually reality.
Take a look at that. Actually, that's because that is exactly.
Boston Frank saying about the cap to GDP ratio 225%, and the stocks have gone up 3 days in a row. if they were to pause here, it would not be surprising. Let's put it that way. With so much, such an action-packed, jam-packed, as Jeremy Corbyn said, or something about on the train. So much going on.
So this is what we're talking about there. Very similar pattern there, as you see.
What a dull year it was, 2017. It was so painful.
Yeah. So we started the year at 2258.
Barely ever had a 2% down day, I think it was, really.
Yeah. And then January
carried on for a while just to get everybody in, and then you had the first drop of the year. And then actually did continue to rally. And then you had October, November.
2872 to 253. So it was, 10%, exactly 10%, but that occurred in about 30 hours.
Yeah. It was very much everything, everywhere, all at once.
Good stuff. Right, Luke Moore will be here after the break, and then you've got myself and Elliot Harris talking options world in about 25 minutes. See you then.
Ready to start and says slow down, let's guess the chart.
Good morning and welcome back to the show. It is Fast Markets. It's a pleasure to be here with you, Chris.
Yes, pleasure to have you.
It's nice to have you. I made it back. I didn't burn in the fire yesterday, so we survived.
Burn in the fire?
The fire alarm.
Oh, the fire alarm.
The fire alarm, yeah. I'm back. So
I watched the chaos from home. It was so entertaining watching you leave the building and then back again.
Yeah, it was. You can prove it's live TV when everything melts down and we have to go and deal with it.
Yeah, great fun.
Yeah, good. Right,
So we had a winner on Guess the Chart.
Yeah, Kraft Heinz. That is an impressive pick. I'd say I don't think I've ever looked at Kraft Heinz as a stock.
No. Oh, earnings today, is it, January? Okay. What an absolute dog of a stock. $90 in 2017. It's just not found.
So tell
It's
me,
not full of beans. Thank you.
I was going to say, outside of
Jump through some spaghetti hoops on that one.
outside of the brand. Okay, outside of the beans, can you give me a couple more of their
They
brands?
have loads, don't they? They're one of the sort of food companies that is absolutely everything.
Yeah.
That's a good question.
What do you reckon? So
Oh, it's all American rubbish.
all American. Capri Sun, Philadelphia.
Philadelphia, lovely.
Kool-Aid, Weight Watchers, Jell-O,
Kool-Aid, drinking the Kool-Aid.
Drinking the
Totally drinking
Kool-Aid.
with that one. Lunchables, that crime against humanity.
Ketchup, of course, is Heinz ketchup.
It is, yeah. So
Not just
Heinz
baked
beans, Heinz ketchup, Heinz spaghetti.
Yeah.
Spaghetti hoops as a child, yeah.
Yeah, I suppose. Well, they're going to be up already, aren't they? Because what's this? Kraft.
Oscar Mayer, we know. Yeah.
Kraft Heinz, they are indicating absolutely flat. The pre-market's just opened up, of course, because we are an hour ahead in the US.
Of course, yes.
We are indeed.
But this week and next, or just this week?
I
think it's just this week, isn't it?
I think it is just this week. Yeah.
Just to get everybody confused for a week and then back again.
I think it is just this week. Right, let's hit some fast markets. What have we got in the chat?
Archer Aviation. Okay.
Archer Aviation. Now, Archer Aviation, from my memory, these are the eVTOL company. Is this the small?
Ding, you got that right, yes.
Yeah, because I've got
in California.
I've got a small position in Joby, which are doing something very similar. Joby Aviation.
Oh, so what do they do?
Let's get the chart up.
They make something a bit like I'm sorry.
So eVTOL, I'm not sure what it stands for. Helicopters, very small helicopters is what they're trying to build. Air taxis, air-based taxis.
A bit like the Osprey, the US Marine one, the tilt rotor things.
Exactly. Yeah. So let's have a little look.
Pretty dangerous aircraft, actually.
I'll put that onto your full screen for you. So, massively enjoying 2025 so far. Off its highs. $14 plays 1123.9.
Very, very volatile journey.
Super volatile in our extended hours. So now online and tradable. Are we coming into earnings for these guys? Let me just have a quick look. Archer AV.
November the 6th.
November the 6th. Okay, so we've got a week.
Earnings supposed to be minus 20 cents a share, reflecting a year-over-year increase of about 17%.
Okay, so
getting better, not great.
Off their highs, one would imagine tip ranks has been fairly neutral. Okay, they've only got one coverage with a buy rating at $14, 18% upside. Look, I would say this is a speculative play. I think these things are. Look, there's got momentum behind them. So Joby, who are in the same space, just got an investment from, I believe, Uber to push kind of journeys between JFK Airport and into the centre of New York. So there is certainly appetite for this. I believe there's some more coming through in the Middle East as well, in Dubai.
Everyone wants a flying taxi.
Pretty cool though. Would you get in one?
Maybe. I don't know.
You're more likely to get into a horse and cart than get into a.
That's not fair.
to get into a helicopter. I'd love it. I think it'd be really, really cool. But it will become like the norm all of a sudden. The first couple of people will use it, similar to kind of the Waymos and the driverless taxis.
Yes, I've not done that yet either, so that's my next.
I'm in actually in Austin over New Year's, so I'm looking forward to trying testing them out.
Okay.
Right, what have we got next?
Let's do a Goodwin.
Goodwin. Okay, let's have a little look at Goodwin.
So Goodwin is one. Bloomberg asked me about this about a month ago because there was almost no coverage of this company across the City of London's. There's your chart there. There is that chart, which is roofed, I think is the word you're looking for there on a monthly chart. We would.
Yeah, that is
£20 a share, 200. Most of that has come obviously in the last 2 months. So you're saying with Rich, if it isn't Rolls-Royce and it's not BAE, there's your defence one, essentially.
Okay, and that's monthly?
That's a monthly. So if you want to see the daily,
so it's basically been up almost non-stop since April.
Yeah, it's definitely gone up by leaps and bounds.
What's the step change there? Because we've obviously moved higher.
It's absolutely rocketed through earnings. I think yesterday I had a statement and it said it's doubled, revenues have doubled, and it plans a massive share buyback. I think was the plan.
Massive share buyback.
Yeah, I think it was. I think he announced that.
Interesting. Okay.
And again, because it is so little covered and little aware, it's really sort of the liquidity is not there. So it's a huge, huge run. So you do wonder at what point they're going to do a share split, though.
Well, yeah, of course. I mean, I'm looking at it now on the stock exchange this morning. It's traded 600 shares, but only one share is traded through the actual exchange. So everything's been dealt through kind of market makers and liquidity providers. I do think, just flicking on to the news here, if you want to just flick over to my screen because I've got it all set up here. A piece on the special dividend. So they're a mechanical engineering company. They've declared a one-off special dividend of £5.32 per share, which is, as a percentage, 5 into 208 is 0.5%.
I think so.
Yeah, about that. So not that special, but it's definitely moved the market. I don't know anything about them. I like the idea of rocketing away.
Yes.
But I'm always cautious of shares that go up and to the right so aggressively like this, because those parabolic moves tend not to last.
So it has no analyst covering the stock. This is the crazy thing, and that's just me talking to Bloomberg yesterday about it. But it's an absolute stormer, really. But 68 times earnings, so it's going to be delivering on that. It's going to be hard. But yeah,
Okay, interesting.
let's do Amazon. Let's do a sensible.
Amazon.
Sorry, not a sensible company. Apologies, good bit, but yeah, slightly less mad share price.
Yeah, let's have a little look. Paul Williamson's asking us, Amazon to cut 30,000 jobs. Interestingly, Paul, that was in response. I saw them saying they were going to cut 600 over the next coming years.
Yeah, and they want a lot of this is automation.
Robotics, automation. But yeah, they came out and said that 30,000 jobs is when
Get rid of all those workers in their warehouses that aren't allowed to go to the toilet or whatever it is because they're too busy filling packages.
Come on then, what are we looking at? When are their results? They're this week, are they?
This week it's Thursday evening after the bell, I think he says.
They are. I seem to remember looking at these and looking at the Mag 7, and they're actually on one of the lowest PEs in the Mag 7.
Yeah.
So they are considered.
It's your next value stock in the Mag 7 after the video last week.
I know, yeah. Considered one of the cheaper names in the Mag 7.
Yeah.
They don't distribute any money.
No.
There is no dividends whatsoever.
No, they are getting, it is tightly controlled. But then this is the thing about PE ratios, you can't look at them. You shouldn't look at them in isolation. You shouldn't just say this is X, therefore Y. It has to be what's the context of this against the sector, and what is the context of that against the company's history. So what's the 5-year average? I don't have it off my head, but what's the 5-year average PE for Amazon? Is it cheap or expensive relative to where it was before?
Yeah.
And I'm guessing at the moment it probably is maybe on the cheap side, given the way the share price has struggled a bit, really, in recent weeks.
Well, you look at that though, and you look at the pricing. It's trying to push through. Is that $240? Yeah, 240. Once, twice, rejected it, kind of late summer.
Yeah.
And then now we're potentially trying to get back to that target. Would you be looking at buying it here? I'm never normally a fan of buying ahead of earnings.
No, I think you've got a bit of a risk there. If you certainly not unless you're going to trade it, but it's had a good start to the week, so there's clearly some positivity. But I think you're expecting it to run higher, but it's been a tough one because you've been buying these dips and they continue to dip, and it's you feel sort of stick with it at the moment.
Yeah.
You've gone through a tough.
But you've got
summer.
You look at that though. So you look on a long enough time horizon. That 200-day gets bought. The 200-day moving average gets bought every time it's down there, and so really that's your stop loss, right? If you're looking at it from a longer term horizon.
Once it gets back above it, we're still above it now. We had a test of it recently, so that the health check on the chart is coming out quite nicely that way.
So would you say you maybe look at it post earnings, see where it is?
Yeah, I'd be happy to get it. The risk, of course, is that it just roars away, I suppose. It's your risk here that it doesn't give you an entry point. But yeah, I probably wouldn't doing it right now, I suspect.
Okay, so potentially looking at something like a short puts below that 200-day moving average, perhaps?
Yeah. If you're expecting that bad a reaction, I don't think you'd get that bad a reaction.
Well, probably not. I mean, maybe not even. The 100-day looks a little closer.
Yeah.
Maybe a bit more bang for your buck there, but certainly.
Yeah.
Certainly some juice in it.
Gets back below 220 and then argue for.
What would you classify Amazon as a company now? Is it still a retailer?
Consumer staples at this point.
You're making it sound like a value play now.
Exactly. So consumer discretion, yeah. If you look at it with the broader sector, I think it's still, and the market dominance, of course, is there, isn't it? Really.
Yeah, completely. Okay, Gavin Ackers is asking us to look at RVMD. Let's have a look at that. The ticker doesn't ring many bells in my head.
Revolution Medicines, I think is what.
Okay, you've got it there.
Here we go. Here's your super.
I will try and find out what they do.
Bounce.
Revolution Medicines.
Big gap higher in mid-September. What are we looking at on this one?
It
Market
looks like
cap of 10 billion, so it's a bit of a, well, UK terms big and US terms a bit of a tiddler. But
looks like it moved up yesterday on some cancer drug trials, orphan drug designations in pancreatic cancer.
okay.
I've got to be honest, Gavin. I think with some of these stocks, you've got to understand the science more so than the average person, because you've got to know what you're buying. And I've had plenty of these over the years where you hear from someone that this drug is going to be the drug that's going to cure cancer, or this is going to be the thing that happens. It could do, but it could also squat right back in. So the risk on biotechs are so high because I think you've got to look at the diversification of the drugs within the company, and are you betting the house on one? Are you betting the house on one horse? Is that what I'm saying? It's not, is it? Are you betting the farm?
Betting the farm on one.
On one horse. And without knowing the ins and outs, I'd love to hear some more about it. I mean, that's broken out cleanly above its, what's that, $50 breakout above there, and looks like it's hopefully going to hold it. Let me see what it's doing in the pre-market for you off of the exchange. Revolution Medicines up 0.7%, traded 58.43. So looking like it could hold that high so far this morning. But yeah, for me, biotechs, you can get hyped into them very quickly. Just kind of see how much of their revenues is going to be down to one drug, and what is the potential success or decline of that one drug.
Yeah. Small allocations, they can let them run, they can do really well. I think it's the key thing, isn't it? You buy a few and then spread the risk around.
Yep, definitely. Right, what's next? Have we got any more on here? Drone Shield, Briar Tuck. Drone Shield, good potential. Their motto, bad for humanity, good for business.
Oh, good. So the latest tobacco stocks.
So should we put this one in the sin stocks bucket?
Yes. Good Lord.
Let's have a look at them.
It's not coming up on mine.
Drone Shield. Drone Shield. It's an Australian stock, and that'll be why.
Not on mine.
Let's have a little look. I've got them up on my screen here. I'm going to say that is pretty much every concentrated defense stock. that is. I mean, it's not quite the same chart as Goodwin, but you can see a very similar type of pattern. Look, is without knowing the ins and outs of the company, it's had a top, it's pulled back in. It looks like it's basing. You'd argue the last couple of days it may be making higher lows. You know, if it breaks above $5, does it become interesting to look at again? Probably.
Okay, so it's got a platform that includes its threat AI software, so there's your keyword in there, AI. First order for the platforms come from a European multi-site customer on NATO's eastern flank, so essentially probably Poland, I think is probably the guess there. And it's the thing of the last 3 years of Ukraine, of how drones have become. Drones in the air, drones on the ground, drones in the sea, it's everywhere. It's a new hot topic of how you can use them. You've got the Ukrainians obviously offering the Americans thousands of drones in return for missiles that didn't come off, but it is how they've, I wouldn't say they've revolutionised warfare, because that's a big thing to say, but they've certainly proved their worth, and easy, cheap to build, that kind of thing.
And effective.
Yes, yeah. Of course, it's action reaction. There's countermeasure, that kind of thing. So they found ways of defeating them, or at least sort of combating them. I saw a great video yesterday of a Russian and Ukrainian drone crashing into one another on their way to their respective missions. So
I saw. I mean, it was about a year or so ago now, but they would put netting over the top of key supply roads.
Yeah.
So that in theory the drones couldn't.
Yes, they're getting. Or the fishermen in France are giving their netting, because you can put them over the road, so then it helps defend them against drones. It's fascinating how this works.
Hey, look, if it is anything that can kind of lower the cost of human capital of these things, I'm kind of all for. Not that I'm in any way advocating for war, but if less people are dying, then fantastic. Yeah, look, I mean, technically, without knowing the kind of the ins and outs of the financials and order books and kind of productions, technically speaking, it's had a move. It's pulled back into some level of support. It's trying to make higher lows, stop below kind of $4, try and break out above $5. Maybe a potential idea there. Yeah. Cool. Okay. Have we got time for one more? What do you think?
PFE.
PFE, Pfizer. Pfizer is PFE.
Yeah.
Pfizer. Bad news.
Petrofac was PFC, I think it was as well.
Petrofac, which is
Delisted.
being delisted, yeah.
Pfizer.
Pfizer. What a dog.
Poor old Pfizer.
What a
Do
dog.
you get a dividend for your trouble? You probably do, don't you? Yeah, 7%. Okay. Well, you should hope at that kind of size.
Well, yeah,
that
but
kind of share price performance.
Yeah, I mean, that's just going to be, they haven't lowered their dividend coverage yet with the share price move.
Brutal.
So therefore, it's a decent yield. Pfizer. I think they're still going to be trading like they've got the hangover from the COVID vaccines.
Yeah, 11 times earnings. So, you know, not aggressive. It's just not.
But it's not as interesting as other biotech plays. It's a consumer healthcare business. Look, I've never really traded it. We don't get a huge amount of interest from clients on it.
No.
Certainly not kind of post-COVID.
COVID hangover is yet to clear, and the fact that it's still operating even below these 2024 lows is just not great from a chart perspective. As 11 times earnings, 7% yield, and it probably has a fairly good cash generation, it's probably not bad as an investment. And you're probably safer off buying it down here than you were buying the hype at the end of 2021.
Yeah, I was listening to a podcast the other day about stocks like this, where there's a load of business that gets dealt above where you are now. And they said it was almost like having bodies hanging in the sky. Like everybody that's bought, if they haven't capitulated, they're in theory going to sell as soon as it comes off over that. And the longer this goes on, the more motivated they are to sell as soon as it gets nearer where their average price was. And it just, if you consider it like a supply and demand curve, there's so much supply that could sit above there that people are going to need to push through in order for this to then break out and become back into a trend that you want to play with. It was just an interesting way to kind of to look at it.
It's very sensible, interesting way, yeah. But the price action, you have to have the healthy price action to show that the market likes it, and it's not there yet. Pun very much intended with Pfizer definitely needs a shot in the arm. That
Hey, there you go.
yeah, $30 is your big level, I suppose.
What does your tip rank say? What are we looking at?
What does it say?
Tip rank loves it.
Yeah,
Tip rank loves it at a 10. What is it?
12 holds and out of 17 rating.
Click into the outperform to see why it's got there. So if you do, can you zoom in your screen just a little bit so we can put that in the center of the screen for people? There we go. Analyst consensus is to hold. There's been some positive bullish sentiment. Interesting that hedge funds have been increasing positions in the last quarter.
It's got to be. It will be cheap on it. Again, not looking at the PE ratio just in isolation, but you have to look at it and see, well, it's clearly a lot cheaper than it was, and therefore provides some sense of, you've got maybe more of a margin of safety than you would have done buying it up at the 2021 highs. Sort of channel your inner Warren Buffett there.
Well, yeah, I mean, obviously, that's not rocket science.
No, but cheaper. No, is it cheaper? It's cheap for a reason, that kind of thing. So Boston Frank, I got the Pfizer COVID vaccine shots, and then Julian buying Pfizer last week. So maybe there's something there.
Trump pushing for cheaper medicine, regards Pfizer. Okay. What's the dividend on Pfizer? We said 6.9% away from the numbers.
6.9, chunky.
One more? What are we doing?
The
Bill?
Legal in General? No?
Legal in General?
Up to the gallery. What is this?
Legal in General had some news yesterday. They took on the pension liabilities for Ford. I was on my nicely prepared notes that the fire alarm then meant I couldn't talk to you about it yesterday. Let me see if I can get that story just while you through the technicals.
Well, there's a share price that has admittedly gone sideways over the last decade, seeing a bit of momentum recently. It will chuck you an 8.8% dividend yield in today's dividend competition. Here's your winner. 60 times. I'm not quite sure about that PE ratio. Check on that one.
Yeah, so here's the story that we saw yesterday from Legal & General. They have agreed a 4.6 billion pension buyout deal with Ford. If we can shut my screen up, gentlemen, please. 4.6 billion UK pensions deal. It says it's going to cover the retirement savings of 35,000 people and has put L&G on course to achieve the highest value of their deals so far this year. So much so that the majority of L&G's revenue has attracted private capital giants Apollo and Brookfield, which is interesting. So does that mean that L&G potentially becomes a target?
Maybe. But again, it's this idea that because you've got some big American players coming in, the margins are going to get squeezed. So you have to wonder about their dividend as well at these levels.
Yeah, you do potentially. But no, look, I think people own it because of the dividend coverage. That's why people own, you can own the suite of them. Phoenix, L&G, what's the other one? There's a couple of other big insurers.
Aviva,
yeah, of course, they just took over Direct Line, didn't they, last year?
Yeah.
The people allocate towards them for their income.
Yeah. Because it's predictable.
It's predictable. It's sensible. Of course, insurance is based on mathematics and risk and splitting across the pool, etc. So they have to service the money that they've got.
14% annualized return over the last 5 years. There we go. Oh, and breaking news, Spain's blue chip index finally tops 2007 record high. So even Spain joining the record highs party this morning.
Get in Spain. Do you want to bring the IBEX up so we can have a quick look at it?
Oh, God, dear.
Oh, dear.
Things I have to do.
We've got to make him work.
There we go. There's a nice trend. There's a very nice trend.
That is a very nice trend, actually.
And got away. Well, it kept with a nasty shakeout.
So that would have been the April shakeout, as every chart
Every
tends
chart
to
is the
look
same.
like
It's like
that.
the COVID charts of economic data.
Yeah, exactly. Wow, I had
very,
no
very steady
idea.
climb. Exactly.
I had
Below the
no
radar.
idea.
You've had a decent 60% return since 2024 April. So that's a very...
I wonder what I've never even looked. So you can't spread bet on Spanish stocks. So it's not something that we see a ton of business from. I'm going to see if I can quickly bring up some of these companies that I know who's in here. So in the IBEX itself, Iberdrola, the oil services business, Iberdrola, fuel company, CaixaBank, Grifols,
Repsol,
Telefonica. That's probably it, I think.
Yeah.
Aena, which is a telephony company, I think. I'm just trying to think every time I drive through Spain.
Yeah.
You know, with a rental car when I'm on holiday, what kind of signs do I see? Impressive, Spain. That's actually mighty under the radar. Very interesting.
Yeah.
Cool.
Base
All right.
global rally. There we go.
Exactly right. Well, that was a semi-fast market. So I think we got through what, 5 or 6 different markets?
Yeah.
Yeah,
Nice
pretty
enough.
tepidly fast markets. Next up, Rich and Elliot are going to be back in. Get your questions into the chat, and we shall see you soon.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody. A very smug Elliot Harris sitting opposite, thinks he's going out for a posh dinner. As soon as we touch, it's one touch, isn't it?
It is a one touch, yep. I need to set the alert on my phone because you're not getting away with it.
So I don't think you'll need to set an alert on your phone, believe me. So yeah, just a reminder, I took the bet with Elliot about a month ago now.
About that, yep.
That we would touch 6,000 before 7,000, and we are creeping ever closer, 2% away.
Ever closer, yes. I need some recommendations from people. I've had the George Sank recommended in France. Nice little trip to Paris, possibly. I am going to sting the boy so hard, right? I am actually going to sting him so hard. Like, I want every side, every starter, lobster chaser. I've actually seen him starting to hedge on his account buying S&P futures. He's that concerned about the lunch I'm going to sting him with.
I sold them yesterday.
Okay.
I did actually. What basically I'm trying to do is I'm buying daily 0 DTE call ratios on the days that it doesn't look like it's going to go down. Yeah. And that is helping me hedge, but also being long futures. Managed to thank you for the free money at the weekend.
On the weekend market?
Weekend markets is just paying out every week.
Carry on. Good. Yeah.
That's great. Does that come out of your bonus?
No, mine. No. That's run by the futures desk. No.
But yeah, it was interesting because it's looking up 40 basis points on the weekend markets, and then it opens up 1.1. And just remind everybody how those weekend markets are set up.
Yeah, obviously it's unique to IG, not the easiest to price. Obviously, I guess there going to be two drivers. Obviously, client demand. You've got to be very reactive to any business that comes in. Also, political events that are going on, any breaking stories. Generally, clients are going to be at the forefront of that. So you're very much led by client demand, really.
Yeah.
But we did still see a bit of two-way on Sunday. Hence,
good.
Yeah, we weren't calling up quite as much as what the pop was.
But if a big whale comes in, then we do kind of go limit up, don't we?
Yeah, because it is very hard. Yeah, like we can't hedge it at all. No. So you're not really ever going to get really the concept of a whale, because to build a sizable position, you would be, your first field's probably there, and then the next one is possibly after that. Yeah. You are going to struggle to really build a chunky position on that, unless we've got decent two-way, which some weekends you do have. Like, say, okay, a month or so ago, you had a big story, and then it must have been the Japanese election.
Oh, yeah.
There we saw real decent two-way. Yeah, so if you've got a similar whale on the other side, then absolutely, yeah.
Yeah. And it's great. It's just,
the great market.
Nice way to spend Sunday brunch.
Exactly. Yeah.
Good stuff. Right. Okay. So there you have Paul Williamson is saying private dining at Claridge's.
I quite like the sound of that.
That's the first. I'll see if I can come up with anything as well. Right. Let's take a quick look in the market then, because gold is getting hit further. We're heading down towards 3,900 in the gold price. That at the same time as we're back down to $60 oil.
Yeah, but that correction's kind of been coming. You've got a feel in gold. It really has just been an unrelenting bubble. Many experts in the gold market have been calling this, and I think I read a comment in the FT that only a lunatic, could have ever saw gold get into the highs that it has. So these sell-offs are quite healthy for the market, so it hasn't come as any real surprise. Actually, and I'll come on to it shortly after. I touched on last time, came on, a fortnight ago. Gold IV was, I think, double the historical 10-year average. That's now come right back off. So gold returning to maybe a little bit of a normalised market, if you can.
So sorry, pullbacks are healthy for markets.
I think so, yeah. So, but we're not going to get on an S&P, but yeah.
I mean, that's over 10% we've had a pullback in gold now. We only need a 13% pullback in the S&P, and this could come back to you. Good, but yeah. So what's happened with volatility then in the market?
Yeah, it's a vol kind of across the board has eased. As I said, gold IV was by far the highest. In fact, Phil, can you guess up my first chart, please? Exhibit 1.
And this, of course, because the US-China
Exactly.
framework at the
That
weekend.
hasn't come as a surprise to anybody, surely.
Yeah.
Huge progress there made over the weekend. Market now beginning to look through the noise, you could say. Yeah, and we've seen that in kind of, so as I say, that's been a big driver of the gold reversal. Any expensive tension there has kind of evaporated, if you like. S&P skews flattened also as well. 2 reasons. One, the demand for the downside has dropped off.
Right.
I think you'll be last man standing soon. And demand for the top side has really begun to come in. So you're seeing quite a shift in the skew structure, if you like.
That explains some of my view now.
Absolutely, it will. Yeah. 2-3 weeks ago, that skew on the downside was probably trading high 90 percentile. It's now back down towards 60 odd. Yeah. So just to talk you through this chart here, chart that I pulled up 2 weeks ago, basically showing your historical 10-year average, if you like. Gold was trading way over that, but you've seen a significant pullback, in the underlying, but also in the implied vol. So,
So vol's gone down as the price has gone down.
Yeah.
Interesting.
Yeah. Just because it's kind of been the first letting off some steam, if you like. Which it hasn't shown any sign of doing since, April, May?
No.
It's been, so that's been a long time coming. For those of you who kept the faith, well played. I think you would have had to have pretty deep pockets to do that. But yeah, you can also just see the equity vol as well come off. VIX last week was off roughly 4.5%, down towards now a 16 handle, which is kind of, I would say, in the long-term average over the last 2 or 3 years of VIX.
Yeah, true.
Around there, yeah. So vol is ticking along, but a big week this week. You've obviously got a Fed, you've got a Bank of Japan on Thursday, and you've got some huge tech earnings out.
No risks there at all. So I can see
no risk at all, Rich. Absolutely. But the risks are rapidly fading. I've got to laugh at the comment, Greg's. Yeah, if Rich could have it, we'll be going to Greg's.
Back to Greg's KFC.
True Scotsman.
Yeah, good. My team looking after me there.
Yeah.
Skinny Grill's not a bad show.
I've not heard of that. Okay. Yeah. So, vol. Yeah, it's a huge week. Fed, 25 basis points, fully priced in now. Okay. We've not had such a clear dot plot as this for quite a while. So you've got 25 basis points fully priced in for Wednesday.
And for December.
And for December.
And for January.
January's a 50-50 in terms of...
Sorry, you're right.
So there were people that were calling 3-4 weeks ago for a 50% basis point cut in deck. Felt very heavy to me, felt very toppy. Now, given the data delays that we've seen, that's completely off the table. So no real story there is going to come out of Wednesday, you would believe.
Yeah.
For example, if you were to have a look at the Wednesday S&P options, there's an implied market move of about 1%. Now, for a Fed, that is very low. Even further, if you've got a VIX trading around 16%, your average daily move on S&P is around 1%. So there's no extra vol being priced in by the market for a Fed. That's almost unheard of. Okay, so it really is as much of a non-event as we've seen.
Yeah, I have actually shorted the straddle on today.
Okay.
So, well, almost the 68, 65, 68, 70s.
Effectively, yeah.
I went slightly higher on the calls just in case, because I'm going to get hurt anyway if it goes up. So that was at 7 and 16. So 23 points for today. But then I had a crack at Wednesdays as well.
Okay, good.
Just to see how those acted, and that was the 70s and 60s. What was that? 43 ticks.
Yeah. So not quite a straddle there. If it was a straddle, it would be closer to 1%, maybe.
It's not much, is it? For
It's not for Fed, exactly.
well, there's no right enough. There's no Mag 7 earnings in there because it finished.
Thereafter, exactly. Yeah. So you won't. Yeah. So no real vol coming from that Wednesday. However, on the tech side, huge event. You got 5 of the Mag 7 reporting this week. You got 3 on the Wednesday, 2 on the Thursday. Obviously, we are the only people brave enough out there to offer you daily options on the Mag 7. So certainly Thursday morning, worth a look on your likes of your Google.
9 a.m.
8 a.m. this
8
week.
Of course.
Our clocks have changed. The US haven't. US change this weekend coming. So we'll be back to regular open hours next week.
So this is now my 24th year of trading with the time change.
Okay.
And I got on the tube yesterday at 25 past 1. I got out at 38 minutes past, and I went, what's going on?
It really throws you. It really throws you. It's
Every
weird.
single
Every
year.
single time. Every single time.
I remember the clocks change on Sunday morning, but I didn't remember the fact that the market was open. So Meta, Microsoft, and Alphabet daily options will open at 8 a.m.
on Thursday.
On Thursday morning.
So you can really trade the market reaction after the earnings, which are obviously after the closing bell on the Wednesday.
So when they're all down 10%, I can still buy puts.
You can still have a go. Yeah.
Excellent.
So a big week, but more focused on the tech side than a macro level, I think. So.
Yeah, and unless what do we think he says in the press conference? He's not going to rock the boat. He's got no reason to, right? I guess he might have a little bit of a moan up about not being able to see any economic data.
Yeah, but I don't think he will. Yeah, I'd be surprised if he was to make any sort of comments along those lines. Just got a comment there coming in saying, what type of IG account do I need to trade actual options? More than welcome if you want to open an account with, obviously, Tasty. Here in the UK, we did have that via the UK platform. That's now coming to a close. However, you're more than welcome to still open an account and trade actual physical options. The options that we offer here at IG are essentially a spread bet or a CFD. You never technically physically own the option. So behave in the exact same way in terms of the pricing. You don't actually get the physical exercise. So by all intents and purposes, they are the same thing. But if you want actual real market options, Tasty is the place to go.
Yeah, and I remind, away from the numbers, have you had your US account open yet on Tasty? Let us know there, because I know there's a few people moving their accounts over, with today being the last day. Yeah, today being the last day of positions there.
Okay.
Right, you showed us the VIX EQ versus the VIX spread before, didn't you?
If we can bring up that chart, that's chart 2. There you go. So this kind of just, again, I brought this up. This is trading at the moment back on historical highs. Okay, around 24. i.e. that's the difference between the VIX for equities versus the VIX of
Broader market.
S&P, if you like, yeah. So S&P vol has come down. As I say, VIX index has come down to a 16 handle, roughly week on week, off roughly 4.5 points. So you've got your S&P vol coming down, your equity vol in what is a huge earnings week has gone up. So that's just taken us back to the highs again of 24. So once this earnings season kind of passes, that's going to tighten again, because you are going to see that implied vol on the equity side come off aggressively. But so big week, Wednesday, Thursday night.
It's I wonder. You're in next week, are you?
I mean, yep.
Be very
Already.
interested sitting here next week, because Matt Arbour and I, opposite sides of the table. He was in on the morning of April what was the Monday? Was it April 11th?
Yeah, the second was the Friday. That was kind of the catalyst. That was when we really came off.
Yeah, so 12th, April 12th.
Yep.
He was sitting there, and it was really in the depths of the crash.
Yep.
And we did say, well, I wonder how we'll be looking this time next week. And of course, everything was great by then.
Yep.
So it will, this is as pivotal this week because these are the companies that are driving this market.
Absolutely.
Right?
Yep.
Kind of forget Nvidia because Nvidia's earnings are dictated by this week as well. So you get a really good read on those. Then you've got Trump and Xi as well.
Yep.
That we've now priced in a deal between those.
Yep.
Even though the framework didn't really cover Nvidia, it didn't cover the chips. It covered rare earths, but I don't think anybody really thought that China was going to stop exporting rare earths.
Yeah, I was reading an article, can't quite remember where, but saying that the market opportunity for Nvidia in China is still huge. Domestic developers just
and there's nothing
can't
in
deal with the demand. Yeah, and so that's almost a free market, for them to go and take over. I don't know if Chris has mentioned this week, but so far 87% of S&P 500 companies have beat earnings.
Oh, Chris mentioned it. Don't you worry about that.
Versus historical average of 75%. And also a lovely line, this one. This week is the single best week of the year to be long S&P based on the 1 week average returns since 1950. So just
historically speaking.
That's implied by the seasonality, yeah. So we're already up, just over 1% on Sunday night and yesterday.
Yeah.
Today we're effectively flat. Yeah.
Could be this week.
This is the start of Santa's getting his uniform on. I think it really is.
My friends actually went for Christmas drinks with a Christmas tree up in Yorkshire.
God, that is early.
I mean,
that's aggressive.
What is going on there?
That's aggressive. Well, so for me, we're maybe talking about, I was probably on a month or two ago talking about 7,000 and maybe feeling slightly dreamy. You'd have certainly had that view. Now, I think that line's shifted way higher. Come December, I'm a buyer of 7,100, even maybe 7,200. Like, I was having a look at the deck.
It's not that wild.
7,000 calls, the 71 calls. You're not paying a huge amount for them.
Oh, what, for 71, 72?
Yeah. Yeah.
What, 16?
Look. Have a look.
I might have some of those.
Let's have a quick look.
that might be my edge.
So what felt like a little bit of a dream.
Do we have a year end? No, we've only got deck.
Yeah, so this will go off.
Come on, let's get the
Friday,
30th of December up there. Come on.
They'll be up. They'll be up Monday. Okay. We only do 2 end of month contracts. Yep.
56 minus 30, 26.
Okay. Yeah. So, yeah, they've gone up slightly. Yeah, I don't think that's
all right.
What
about a 71, 72 and a half, 1 by 2 is 12.
12. Yeah. Yeah. If you come and saw me, I could probably do it 11, maybe 10 and a half. Possibly.
Yeah, all right, mate. Yeah.
If I can shape and spread off.
Good
I feel
man.
sorry for you as well.
Then we can go crazy. 7,000, 7,200, 1 by 3 for 3 ticks that you would do me for free.
I'd be worried about the 1 by 3.
Why?
You could come into the auction and you could be sat on.
But your break even 7280.
Yeah. But you could, if we have a strong, let's say we have a good earnings this week, you'd stick on another 1%. Quite easy.
Yeah. No,
you didn't touch in 69.25, 69.50. You ever rally through November? Right. I wouldn't want to be sat on that auction.
What worries you?
Short of 1 by 3.
What's the negative at the moment?
I just think all the risks are just rapidly drying up.
Thank you.
I really
So
am.
What's priced in?
Yeah.
It's if you already know that,
Yep.
we know there's a China deal getting done. We know that the Fed's cutting 3 times.
Yep.
We know that you know the companies this week aren't going to come out and cut their capex numbers on AI
Yep.
capex. So we're priced in.
Not quite priced in, but certainly.
Well, it is because you haven't been able to tell me one negative.
True. Right now, I cannot think of an obvious negative that can stop this. But often,
this
often that
climbing-
is a dangerous sign. That is a dangerous sign. That is
Climbing
when
the
you
wall
fall
of
off-
worry.
That is when you
There's
fall
no
off
worry.
the ladder. That is when you fall off the ladder. Yep.
What interested me this week, all the talk about TikTok being a security threat and everything. Do you know this Kai Trump, his granddaughter?
Okay.
Great golfer.
Okay.
Unbelievable golfer. She went to the Ryder Cup and everything. She's quite a big hit on TikTok. Lying on the sofa in the Oval Office, doing a TikTok, saying, "This is so weird to be, scrolling TikTok in the Oval Office."
Wow.
what has the White House become?
Yeah. Wow.
I mean, she's brilliant. I think it's great for
How old is she? In the teens?
like 12, 13,
Yeah,
something
yeah,
like that.
yeah.
But to be doing that in, bringing almost bringing her granddad, making him real,
Yeah. Yeah.
right? And
Yeah, because kids of those age, they've heard of him, but only because I've probably seen all the skits and all the training sketches of him maybe doing the fake tan and things like this, and
yeah.
don't really know him for any of his content and actually for who he actually is. So for her to actually bring that down, yeah.
And then she's out on the White House lawn chipping balls into they've got a golf hole
Oh, wow.
on the White House lawn.
Fantastic.
It's very funny. I'm not sure Americans, especially Democrat supporters, are too chuffed with it. But
I bet. Oh.
so we've got earnings, we've got Trump and G. What level would you start to get? Would you say that was enough?
What, in terms of...
As in, 2017, we felt exactly the same, right? And we went into January, and January we popped up another 3%, and we got smashed down 12.
Yep.
2008, we had a big 07,
Yep.
and then we went 8 days into January, and Jerome Kerviel had the Euro stocks down 8% in a day. Where do you see us in 12 months' time? Do you think we're at a sort of 7-7?
Not a million miles off. Yeah.
Right.
I'm
So this
not
continues.
above that. I'm not above that.
Yeah.
7,500, I think. Yeah. That's kind of where I think we'll...
Okay, so 5% next year.
Yeah. Yeah. Which...
It's not great, is it?
No, I think it's fairly conservative. I do think we're going to see 3, 4, 5% now.
Yeah.
I really do. Yeah, and we're beginning to see that in terms of the market demand and also what we're beginning to see on desk. Beginning to see a lot more interest in that top side.
So if you were in my position and you were short upside calls, what is there an index that you would be happy buying that wasn't the S&P? We've seen strength in Japan, we've seen strength in India, FTSE 100.
Yeah, FTSE for me always feels fair value, really. Obviously has rallied, 9,400, 9,500. Touch high now. Obviously has lower vol, so I'm a big advocate of, and this is possibly the only thing that does concern me. Index vol, for me, has a floor. Okay, so we've been ticking along on that floor for quite some time now. Start of October, had a few catalysts on the Friday, didn't we? Had a few pullbacks, if you like, but all that did was just give people fresh chance to come and buy the dip, and we've seen that certainly on the top side on the calls. FTSE Vol on the front month is back with a 9 handle. Now, it doesn't go much below that.
Especially if you're touting a Christmas rally already.
So, if you bought options, and I've not got any empirical proof of this, but I haven't sat in front of it for over 20 years.
It's near
I'm
enough.
right. If you bought options at 9% vol,
Yeah.
mainly even at the money puts, you might not get a pickup first month, you might not get it 2 months. But I'd say within 3 months, you are going to have some sort of pullback.
Okay.
So we're not far off hitting those historical floors now.
And what contract would you suggest, for example? Like a March?
As I say, that's the only bearish bone that I've got in my body, just where bow is. So I've kind of got my stats, maths head telling me one thing, but my heart and everything else is saying, no, this continues. I wouldn't be buying a December because I really do think we rally, but maybe first quarter next year I can see us normalise slightly and just almost take a breath, if you like.
Yeah.
So I wouldn't necessarily...
So doing a calendar, buying debt calls, selling February calls 100 points higher.
Possibly. Nice trade.
Okay.
Yeah.
Let's price it up. Right, let's take a really quick look at the US Open then. Of course, that's been going on since 8 a.m. AMD, the loser on the day, 75 basis points. We're going to get Elliot to do the winners. IBM down 30 basis points. Berkshire Hathaway trading $486. Intel unch at $39.50. Nvidia unch at $191. Go on, Billy Bull.
Yeah. Well, there's nothing overly exciting, really. It's a very quiet opening, to be honest.
Alphabet 270. Wow.
That is mad. Well, you got your Amazon up. Yeah. No real shocks there. It's a very, very, very quiet morning.
Just read it out for our blind viewers at home, please.
Blind viewers, right? So what you got? Google up 0.6%. You got PayPal similar up 0.6. Netflix up 0.3 almost, and Amazon up 0.3 as well, ahead of earnings this week.
I've had some Netflix actually.
Okay.
So I'm not absolute crazy, blind short.
Yep.
I am long Oracle, which went down yesterday in an uptake. It's great. I'm long Netflix.
Did you trade the options? You're asking me about the options on Oracle.
No, I didn't actually.
Okay.
Oh no, so I did.
Good.
I'm short the 320 calls and the 350 calls. Okay. So that's actually they've both paid very well. Okay. Sammy Peach booked the wrong contract for me as well. Traded the 350s, about the 360s, so I had a 1,000 P&L straight away.
Oh, nice of you. Okay.
Yeah, but we sorted it. I confessed.
Very honest of you.
I said, "You're giving me free money yet again." Netflix obviously has come down from 1,240 down to 1,100. Yep. So I've sold the $1,000 puts and now bought some stock at 1,090.
Okay. I like that trade. Yep.
Feels like enough. Enough's enough. Gold has been smashed through 3,900 as Elliot has been
continues.
Speaking.
Wow.
Where we can't get gold up there. Sorry guys. Let's get this one up. 3,888. Wow.
That is taking a kick.
It's really a fall from grace, isn't it? Hey, I tell you what. As soon as my minister at church mentioned gold in his sermon, and that was it. That was the top.
Where'd you go to church?
HTB on Brompton Road in Knightsbridge. So it's where they started.
Lovely church. I know it as well.
did?
I went for the Carol concert last year,
Nice.
and I'll be going again. I've got some family over from Canada. It was lovely. Really, really, really lovely concert.
What day is it that you go?
We went on the Sunday, I think. Yeah.
Great. I'll make sure I go on the Saturday.
Thank you,
Perfect. Elliot, thanks very much for joining us today.
You might be talking to me by then.
Yeah, we'll do that. We'll do the Carol concert and then go to dinner.
There you go. Sounds good.
No, I'm not paying for your whole family. Good stuff. What was that? Sorry, producer Phil. Coid is coming out. Have a Google. So obviously Coid came into the studio. That's the Crane Shares robot for the humanoids ETF. Coid came in. Coid has now got I don't know if it's a girlfriend or, but there's another robot going around on social media that is identical to Coid that you're about to see in the upcoming thing. It's very funny. He's like a little rebel, or it's a rebel version of Coid.
Oh wow, okay.
And it swears and it puts the finger up and all this kind of stuff. It's very
like
funny.
the Disney character Stitch.
Yes.
Okay.
Yeah.
Oh, cool.
Classic. Right, so that's coming up. It is, of course, Tuesday. Join us tomorrow morning. We've got Piers Buckworth in, as always, on a Wednesday. And Scotty Burns going to be joining me in the hot seat. So it is a real hot start to the morning. Join us then. And Elliot, thanks again.
Humanoid robots is a mega trend, okay? And it's just beginning. Morgan Stanley predicts there'll be over 1 billion humanoid robots on planet Earth in the coming years. It's becoming a $5 trillion industry. So this massive industry that's just at the beginning.
Hello, welcome to the show, and I am joined by a very special guest, Jonathan Crane, founder and CEO of Crane Shares. But Jonathan, you've got an even more special guest for us, right?
We do. We have a big surprise here today.
Oh my goodness, introduce
Here we go.
us. I'm so excited.
Please meet Coid, okay?
Hey, Coid, how's it going? I hear on the street, I've been getting messages since yesterday. Coid is the first, am I going to get this right, the first humanoid to ring the bell at the London Stock Exchange?
Absolutely. Yep. We're very proud to have Coid ring the bell to launch the Coid Fund on the London Stock Exchange. And Coid's also enjoying the time in London and has arrived and has been walking around and almost as a tourist, seeing all the sights in the city.
This is incredible. So trader friends and investor friends watching this, you can access Coid on the IG platform. Talk us through how you take a look at such a wide array of humanoid, AI, robotics related stocks. Huge selection there. How did you filter the top constituents for the stock?
Yeah, absolutely. So first of all, at Crane Shares, we believe global humanoid robots is a mega trend, okay? And it's just beginning. Morgan Stanley predicts there'll be over 1 billion humanoid robots on planet Earth in the coming years. It's becoming a $5 trillion industry. So this massive industry that's just at the beginning. And so in terms of putting a portfolio together, you look at the companies that are producing the robots, you look at the companies that are making the hardware, that are making the batteries, that are doing the chips, the whole ecosystem around it. And the ETF is a basket of 50 stocks. These are leaders in the global humanoid robot space. Many of them come from China, the companies in China, and then also the United States. And then we have companies from Japan, South Korea, Germany, and some other countries. And it's equal weighted too. So companies like Tesla and Nvidia are in the basket, but we didn't want those to, from a market cap perspective, to to outshine others. So we've equal weighted this, and also it will be rebalanced quarterly.
I'm glad you brought up the chips, because I also noticed you've got companies related to sensors, even rare earths. Talk us through the spread and how you decided to allocate this.
Absolutely. It's the entire industry of humanoid robots, and that starts with the resources like rare earth metals that go into the robots. It also is all of the parts of it. So the hardware, the battery, which is very important, the chips, and the sensors. So there's a whole ecosystem of leading technology companies that make up the Coid portfolio.
Fantastic. And for those of you watching, you might be asking, how soon before we see one of those, on our high street or in the shops?
I think today. So Coyd has been walking the streets of London, but I think this is now the beginning of the humanoid, revolution, let's say, and there'll be hundreds of millions to billions of robots in the coming years, and this is going to be a massive industry. So the Coyd ETF, really helps investors get at the ground floor of this exciting industry.
How soon? I guess everyone's asking at home or watching from their desks at work. How soon can we see something like Coyd become mainstream, right? Something like Coyd, perhaps, walking around the office or in shopping malls.
It's coming. I mean, it's right. Use cases today are you obviously factories and production centers that are in automation. Have a lot of robots involved. You're starting to see robots at shopping malls. In coffee houses, actually.
Like in Asia.
In Asia, exactly. Hospitals are starting to have robots, and then elderly care homes are having robots, and then universities too, and both for students to study the robot and actually look at getting into a new industry called robotics and humanoid robots. So, but I think the use cases are going to expand very quickly. So it's interesting, when we had Coyd on the streets here in London, it was like you could feel that it's the first interaction that the populations had with a robot up close like this. And
makes it real.
Makes it real and approachable too. So,
I can tell.
Yeah, exactly. Yeah, they actually the robots seem to even have a personality to them.
So take us through what Coyd can do. What can you program this robot to do?
Yeah. So we also want to thank our friends at RoboStore, okay, that are experts at humanoid robots, and they're clapping. So I think it's some of the use cases are like I described. I mean, it can assist everyday life. Like we've seen robots even at trade shows, okay, handing out brochures and greeting clients. But I think the support where eventually everybody can have their own personal robot. And then it will be, obviously all this technology is to make the world more efficient and our lives more efficient.
Now, tell us, because I am very excited, more so, about what's inside Coyd. So those of you that watch the show, you know that I am extremely excited when it comes to tech stocks.
Yep.
Am I right in saying there's an NVIDIA chip?
Yes. So this robot actually, so the right now the leaders in terms of countries, you have the United States and China, okay? Japan, Germany, and some other countries, also even England, are focused on humanoid robots and the whole ecosystem. But really, China and the United States are leaders. But this robot happens to be from China, from a company called Unitree. But the chips inside of it are from NVIDIA. Okay.
So this is fascinating. You've got Chinese tech, but with a U.S. chip in its heart.
Exactly. So I think although U.S. and China are developing their own humanoid robot industry, I think you'll see some sharing of resources. And look, where does it all begin? You need rare earth metals. That comes from China. Okay, that's good. That's a big part of a human robot. The chips are a big part. Both China and America, obviously, NVIDIA is a leader out there, and make the chips. The hardware, okay, I think China is becoming a leader at that, especially their supply chains, and the cost to produce is very competitive worldwide.
The fund, the ETF itself, is globally themed.
Yes.
Talk us through the reason for this, and where there is a majority. I would make an educated guess looking at your fund. It's China.
Yeah.
But talk us through, why you've also got exposure to Japan, Germany, and also South Korea.
Sure. Yeah. First of all, we think the humanoid robot theme and industry, it is global. Okay. And we wanted to make sure that we didn't just pick one country, that we offered the global solution. And I think a lot of these, the major, production centers that are happening in China and the United States, they'll expand globally too, and they'll go to other countries. So we thought this is the, KOID, COID is the first humanoid robot fund in the world. Okay, so CraneShares launched this fund. We wanted to be early at what we think is a multi-trillion-dollar opportunity, and allow investors, give them access and exposure early as this industry really takes off. But to be responsible on that first portfolio, we thought it should be global companies with a concentration in the United States and in China.
Now, we've already highlighted that you're coming, so I already have some questions from our clients asking me to ask you, Jonathan.
Please.
What if we like the theme, but we're thinking more about stock picking rather than buying the overall industry?
Sure.
What would you say to that argument?
I think this is a situation where you want to buy the industry. Okay, this is, again, early stage of a long-term trend. I think there'll be a lot of excitement around this industry in the next few years. So there'll be a lot of growth within all these companies that are in COID. So rather than trying to pick one stock and we have 50 constituents, 50 stocks in this portfolio, you want to pick one or two or play it. I think it's more safer to take a portfolio approach to humanoid robots, and you buy the basket, which is this ETF, rather than just try to stock pick.
And one of our clients also asking, what kind of duration are you looking at? Is this 5 years, 2 years?
Yeah, this is a buy and hold opportunity. Okay, I think this is the next 10 to 20 years. Okay, with Morgan Stanley predicting 1 billion robots in the next 20 years, a $5 trillion industry. This is one of these situations where you can really get in on the ground floor early, and I think this is buy and hold.
What other sectors are you seeing the most demand for, AI robotics?
Yeah, so obviously factories, production centers with all the automation happening, robots are a big part of that. We see hospitals, elderly care homes, also as good use cases, universities, as you mentioned. And then I think you'll also see in the retail sector, robots starting to appear.
Last but not least, I'm taking him home, right?
Yes, I do. We're going to say goodbye. That was part of this.
Thank you so much, Jonathan Crane here. Such a pleasure.
Thank you.
We're so delighted that you've set aside some time for us and bring COID to the show, Trade Live with IG, because it's you've flown halfway around the planet.
Definitely.
And also, it'd be great to get you when you're next here. To talk about, what the demand has been, how the ETF has performed, and the progress in this very exciting sector.
Yeah, thank you so much for having me today. It was a real pleasure.
Thanks for watching. For more questions, and I'll put them in front of Jonathan for you, contact us on ask@ig.com. Any questions for COID as well, I will help assist you on that. Slam the like and subscribe button. This is Trade Live with IG with myself, Angeline Ong, and Jonathan Crane.